Nvidia is now a $5 trillion company. Yet another record from Nvidia. Many people are celebrating this, and rightly so, because many people own it. If you are invested in the S&P, well, the good news is Nvidia makes up a tenth of your portfolio. At the same time, though, many people are also concerned about the bubble, concerned that Nvidia might be overvalued. However, if you look at the multiples, actually the valuation isn't that crazy. Nvidia is trading at 30 times forward earnings. That's less than Tesla, it's less than Apple, it's less than Microsoft. And the reason Nvidia rallied again this week, it's quite simple. Jensen Huang told us that earnings are going to increase even more. $500 billion. That's how much companies are expected to spend on these Blackwell and Rubin chips through 2026. So when you see that number, well, suddenly $5 trillion doesn't sound so crazy. Now, the real problem here with the valuation, it isn't exuberance, it isn't speculation. The real problem here is certainty. Specifically, a certainty among Wall Street investors that those $500 billion are actually going to materialize. Yes, $5 trillion for a company that's about to generate $500 billion is reasonable, but it's only reasonable if you believe that those $500 billion are guaranteed. And as we've discussed on the show before, none of this is actually guaranteed. In fact, there is good reason to believe that those $500 billion won't materialize. We know, for example, that one of Nvidia's largest customers is OpenAI, and we also know that OpenAI doesn't have the money to spend as much money as they say they will over the next few years. That has been a big concern with the company. So even if it does materialize, well, then the question is, how long will it actually last? These are the $5 trillion questions. So in sum, $5 trillion is fair game if all goes to plan. And the most important word in that sentence is if.